The S&P 500 has nearly doubled since 2022. Bitcoin is brushing up against $80,000, and everywhere you look, people are telling you this is all about the collapse. But what if I told you that narrative isn't just incomplete? It might actually be leading you to make worse decisions. Today, I want to talk about what almost nobody is explaining properly. Why we could see a correction in the stock market, why Bitcoin may struggle to break cleanly above 80,000. The market isn't as simple as many people make it sound. Markets don't move based on what people believe, they move based on liquidity. And right now, liquidity in the financial system is functioning well. When I talk about liquidity, you already know what I mean. Available money in the system, repo markets, short-term rates, financial intermediation, all of it. And right now, it's stable. There are no major stresses. So if everything looks fine, why could we still see a correction in the coming days or weeks? The answer has nothing to do with emotion or theories. It has to do with capital flows, specifically pension funds. There's increasing discussion about a potential rebalancing involving hundreds of billions of dollars. What does that mean? These funds have made significant gains in equities, and they may start selling part of their stock exposure and rotating that money into bonds. And why bonds? Because right now they offer attractive yields, around 5% in some longer maturities, and if rates fall in the future, that becomes even more compelling. Now let's talk about Bitcoin, because this is where things get especially interesting and more complex. Bitcoin is trading around 79,000, right at the key resistance level we had marked out. Price reached that zone, reacted, and moved back into the range. That confirms something important. There's activity up there, there's interest, and it's not small investors. And before any short-term analysis, I want to remind you of something important. Several institutional models suggest the structural bottom was already set around 60,000, meaning the worst may already be behind. There are concrete reasons. The first is options expiration, which I mentioned in the previous video. We're looking at a massive expiry involving billions of dollars in contracts, and that means there are strong incentives to keep price from exploding beyond certain levels, especially around that psychological 80,000 zone. What usually happens in these situations? Price gets pinned, or it pulls back, and that's exactly what we're seeing. Or does it catch everyone off guard? And that's exactly why I don't like shorting here. Too many people are already short. And if the market turns, it could squeeze hard and liquidate a lot of traders. Now let's talk levers, because this is what actually guides decisions. On the downside, key support sits between $66,000 and $69,000, and especially around $74,000. Why do these levels matter? Because there was prolonged accumulation there. Price remembers those zones. Institutions do too. And 74,000 in particular has flipped from resistance into support. That's a level worth watching closely. On the upside, 79,000 remains the wall. Every time price gets there, selling pressure shows up. That's not random, that's where bigger players are making decisions. Now where become price gets, Bitcoin is moving inside what I'd call a transition zone between 7040K and 79K. It's not pure accumulation. It's not pure distribution. It's a market deciding its next major move. And there's something many people overlook, the speed of the moves. When Bitcoin rises, it does so fast, aggressively, almost effortlessly. When it falls, declines are slower. That's a huge clue. It suggests the underlying trend remains bullish. And if we bring volume into the picture, as I always say, it gets even more interesting. On the latest push toward 79K, price made a higher move with less volume than before. Not because they don't work, but often they add more noise than clarity without context. I prefer something more direct. Price, volume, institutional behavior, liquidity. You see me talk about it in every video. So what can we expect in the coming days? I see two main scenarios. Scenario one, a bullish breakout. But not just any breakout. For it to be valid, I need three things. A clear increase in volume on the breakout, then a pullback on lower volume, and then a renewed consistent impulse higher. If those three things happen, odds favor continuation upward. Scenario two, and honestly the more likely one, price keeps moving inside this range between. And honestly the more likely one, price keeps moving inside this range between 74K and the 79K. Maybe even a temporary retracement towards 76T. Without change, markets need time to build the next move. And inside that range, you get the usual rallies that make people think new highs are coming. Drops that make people think everything is collapsing. And in the end, neither. Just a sideways market cleaning out both longs and shorts. My stance right now is simple. Wait, if Ethereum doesn't participate, the rest of the market usually struggles. And that's one reason many altcoins haven't exploded the way some expected. You have to factor all of that in. Now, going back to the macro picture, if we do get an S&P correction because of pension fund rebalancing, what happens to crypto? This is where many people get it wrong. Could we see an initial reaction, some volatility? Maybe a short-term dip, sure, but if system liquidity remains strong, crypto could just as easily move sideways or even higher. And as long as the liquidity continues functioning well, which for now it is, there's no reason for panic in stocks or crypto. So to wrap up, here's what I want you to take away from all of this. Both equities and crypto move on liquidity and institutional money flows, not simplistic theories or collective emotion. If the S&P 500 corrects, it's likely a technical and temporary move driven by rebalancing. If Bitcoin struggles at Ethereum's and positioning, and if Ethereum stays weak, altcoins will feel it. Watch liquidity, watch coins will feel it. Watch what institutions are doing. Because that's where the real signal is. And while all of that remains healthy, stay calm, stay rationalized, and above all, don't let yourself get pulled into what the crowd is doing. Hope you're all doing great. See you in the next video.